Uh, KettleSpace is very affordable restaurant co-working. Ordinarily, they have restaurants all over town, but because we're all on lockdown right now, they have a virtual platform for co-working. It's free right now. And it's fantastic because it really helps people to connect. And even in my last newsletter, I wrote about the importance of connecting and networking online. And just because you can't actually physically be at an event, you should still participate. And there are so many events, and I've gotten so much fan letters. So yes, feel free to join the KettleSpace virtual platform. So David is our guest investor today from Prudential Financial, and he was just promoted. So David, would you like to go around the room, or do you want to talk about yourself and financial and your new promotion?
I mean, it wasn't a promotion. I'm just changing focus a little bit. But I thought what we would do today is, I know, again, we have about 28 participants. Why don't I I don't want to talk about myself so much, but I wanted to give you give you the verbal overview of what I do and my history of Prudential and in the context, and then we can just jump in to Q&A and the back and forth discussion. But I want to make sure I get up front, and that will give people an idea of what kind of questions you might have or what you'd like to ask. Does that make sense, Bonnie? I'll start like that.
Sure.
So I've been in Prudential for almost 20 years now, but I call myself a serial entrepreneur because I've had several careers over that time. 5 years was in Japan, 5 years was going back and forth to Japan, 5 years between operations and strategy, and then and then recently at the end, I've moved into application development. And I like to be able to start new entities within the context of the a large public company like Prudential, and I feel Prudential is it serves as a multiplier. I can carve out my niche and have a domain of control or authority where I'm able to build models that work that I can then scale very well. Rapidly is a tough word to use for Prudential, but I can scale much more rapidly because I have a tied audience. My role over the past 5 years or so, my boss was the head of IT innovation for the firm, and in working for him as his head of strategy, I reestablished a lot of our relationships with VCs, and looked not on the VC from the investment side, but taking the technologies that they're offering and bringing them into Prudential, and how can we optimize them within our business groups or in our enterprise teams for use as quick as possible. So that's all the way through the cycle of the governance and the review of the financials and the HIPAA or the privacy law, or just straight up contract negotiations, trying to simplify that process, and then find a business partner, get a POC, do some test and learn, and then see how we could scale it over time. One of the relationships I head up of which I'm very proud is the relationship with Newark Venture Partners, which Prudential is one of the LPs, one of 8 LPs, alongside of Audible from Amazon and TD Bank, Panasonic, Horizon, and Barnabas Health. In that relationship, there's about 3 cohorts in an incubator each year, 3 to 4 cohorts a year in the incubator, plus an investment portfolio. And I assess all those companies and find where I think they might have a relationship to Prudential, where they might be able to be mentored by Prudential associates. And I'm very proud that from that they're in their 4th year, 75 companies or so, of which roughly 10 have come through the Prudential cycle, which is a good result. 6 going into strong into POCs, 3 of which I'm actively managing now. So for very early stage startups, I think that's a really great number. And the issues or the things we face are how we have to find the secret sauce of getting to work in the enterprise seems to be consistent regardless of the solution. And so I've dealt on both sides of a lot of the advising the startups of not just how to present themselves to enterprises, not just how to do the pitch to the enterprise, because I don't think that's the challenge. It's not even just a sale, even though that's a long cycle. It's once you get over that hurdle, how do you actually integrate and be part and collaborate in an enterprise environment and do that successfully, so you can grow and you're not just stuck with the initial contract that you might have signed for $10,000 to get in the door or $100,000 to get in the door, and then you're not making any revenue because you're not growing within that enterprise. So I'm happy to talk about all those types of instances and what it means to be on the enterprise side from a, I guess, kind of implementation and an inculcation perspective. Not the, I mean, I do influence the investments, but I'm not, I do have a, I did go to Columbia. I have an MBA from Columbia, so I did, I do have, I did specialize in VC, but I'm not in the VC team at Prudential. I kind of partner with them and look at the VCs of which they're in, where they're invested in, looking at the technologies to come from those, or to bring technologies I'm looking at to them for investment in directly or indirectly from Prudential.
I just want to mention two things that since you did bring up Newark Venture Partners, and I know that you're a very important partner to them, they currently have applications open for the next group of cohorts, and in fact, we're going to have Allison and Thomas next month speaking at the fair.
Yeah, it's a fantastic organization, and Newark Venture Partners, which is a plug for any of you who are considering it. They have about a 65% success rate in ongoing funding after the initial funding from Newark Venture Partners, which is, I think, almost double. That's almost, I think the industry standard is 40 to 50, so that's a really excellent rate. And their acceptance rate is 3 to 4%, which is about half the, if you look at the other standard incubators, half the industry average. So they do a fantastic job. I was just looking at the first cohort from 4 years ago of 10 companies, and 4 of them are blossoming. Two exits, and one that just did a $5 million round in one huddle. So for a small firm that was based up in Newark, they're doing fantastic work. I love the team. I think very highly of all of the partners and the associate partners there, and what they're in the work they do, and I really like the program. So I could go on forever about Newark Venture Partners and being an evangelist for them. Bonnie mentioned my she did call it promotion. I'm moving into a role where because I've moved into application development, is taking the application life cycle, or the life cycle of a client from Prudential, from the marketing to the mass market, into the incubation or of a sale, and the direct marketing connected marketing to try and get them into, as a Prudential client, into the support in the next phase being the support or the sales cycle, then a support as a customer cycle, and then all the way to the claim cycle. And I'm looking at that map and saying, what's digital engagement look like from that holistically, and then comparing to our competitors, where are our gaps, what's available in the space, and how do we fill that? And I'm looking now, instead of just to fill those gaps in startups, is how do I take those startups and really create an application framework or an architecture framework that we can adapt them much faster and create and make them, bring them to a production model, an enterprise production model, in a shorter term, while the emerging tech team goes out and finds those solutions. So I'm excited about that, and it's same space, just a little bit off, a little bit of a different perspective on it.
And I do want to mention one other thing, since they're accelerators, looking for new cohorts all the time, and deadlines are always looming. Newark Venture Partners, despite the fact that they're only 4 years old, have had quite a few exits. And when you're considering accelerators, always look at the exits that they have, or the number of exits, because then you know who's paying attention to them, whether it's corporate or venture or whatever. So do we want to go around the room and have everybody introduce themselves? You can say a little bit about yourself and what you're doing, and then we'll open it up to Q&A. So who was it? Sean? I know that you're muted right now, but.
Yeah. Hi, my name is Chan. My startup is called Edwards Box. It is a Bloomberg terminal for procurement. So essentially, we want to take features from financial markets and layer them onto the existing technology stack for procurement software within the enterprise in order to change the RFP business process to make it both more accessible to smaller and mid-sized companies that might be a little intimidated by the daunting procurement process, particularly Black businesses, minority-owned businesses, women-owned businesses. And in Canada, we're working on a project with Indigenous businesses. So we have centralized clearing for data, centralized clearing for vendor management, and social networking, which uniquely links buyers and suppliers on the platform. And eventually, like a Bloomberg platform, we intend to deliver automation of the RFP cycle. So I'm very keen to hear about how to penetrate the enterprise cycle, particularly without a lot of social proof at this point.
I worked with a company that was recently merged with another called Connexus that does minority sourcing. And,
Right. I know Connexus, yes.
Yeah. Sooran is a close colleague, and we have we have an investment in them through the Impact America Fund, which I also introduced to Prudential. So it sounds like a similar model, and I know this.
I talked to Impact America when I was chief operating officer for my prior startup. We were a B Corp in the correction space, delivering content to the incarcerated.
Oh, excellent. I'm looking forward to connecting. I'll try and send you each a LinkedIn as you present.
Okay. Thanks, John. You want to introduce yourself and talk about what you're doing?
Yes, sure. Hi guys. This is Tekshan. You can call me TI for convenience and pronunciation, I suppose. I work in. I actually wear 3 hats. One of them is as a founder of a startup, but the other 2 are working as an outsource provider to startups here in terms of technology, and the third is working with 2 startups, one in telemedicine and the other in the restaurant space. The one that excites me more is a toss of a coin if it's the hospital one or if it's the hospitality one. I live here in New York City. Happy to connect with any one of you who are in the telemedicine or the hospitality space in terms of technology. And we are providing a solution for restaurants that can help with social distance booking. So if you know anybody in that space, and telemedicine, of course, all of you know what it's all about. I'm available. I'll put my email and web link down in the chat. That's me. Thank you very much, Bonnie, for getting this together.
Oh, of course. I love doing these things. That's a good point. Ami, you're up next, and people should mention where they are at the moment, because I know a lot of people are not in their usual home base. Ami? Oh.
Good morning.
Okay. Oh, good morning.
My name is Ami Minars, and my company name is Admission Nation. I'm a producer for flamenco and gypsy jazz, and I wanted to have a flamenco documentary film. So that's my plan, and next year I'm planning to have a flamenco fashion show in Tokyo, but right now they postponed the Olympics, so it might be some have to change the month or year, and it's about it. That's what's my product.
Where are you at the moment?
Uh-huh.
Oh, so Duncan, you want to unmute and tell us who you are and what you're up to?
Good morning, everyone. My name is Duncan Northern. I'm the CEO and president of Pink Productions here in New York City, and I am still, believe it or not, in New York City. I didn't flee. We are a live entertainment production management company, so you can imagine we were the first industry to be shut down due to COVID, and we will be the last industry to come back. Yeah. We probably won't be returning until March of 2021. That's the current thinking. And if states continue to slide, it's probably going to be longer. So you can imagine how my industry is suffering right now. 10 million employees worldwide, and we're all out of work. My company works off-Broadway, Broadway, and we work in live events. We'll do anything from the Victoria's Secret fashion show in Shanghai, China, to Slava Snow Show recently on Broadway, to we've got Little Shop of Horrors off Broadway right now. So we're successful. Due to the COVID situation, we're actually in the process of developing a new product, without going into too many details right now because we're still in the early stages, where we've come up with a way of getting real artists into a VR world for paid performances. Not a Instagram concert, not anything else like that. A actual immersive VR world that people get dropped into using their computers, and they actually see a real live Ed Sheeran up on stage. So it actually solves a lot of the problems that we have in the live entertainment world, and is applicable to what we're doing with COVID today. And we've got a whole plan for moving into other markets. So currently we're targeting the concert world, and then we're going to be pivoting to other markets. There's a development team that's working with me. We just completed our first alpha test. We're going into demo in 2 weeks' time, and we're trying to rush this out by end of the fall. We think we can be live by October.
Oh, good for you.
Awesome.
Erin, you're up. Erin?
Yep, I'm here. Hi, everyone. My name is Erin Brown. I'm actually based in Chicago, but I spend time in New York periodically, which is how I know KettleSpace. So I'm the founder of League Connects, and we're a community-driven leadership development platform and marketplace specifically for first-time and middle managers, where we connect them with one-on-one coaching, virtual peer groups, and on-demand leadership resources, management trainings, etc. Obviously, during COVID, we've been kind of iterating. It was always virtual, so that was good. We're kind of focused on the peer groups right now, and are going to be launching the platform the first week of August. So I'm on here kind of to learn from David a little bit too, looking to probably raise like a pre-seed seed round Q1 of 2021. So going to kind of continue bootstrapping for the rest of this year, but would love kind of advice, feedback on kind of steps to start taking now.
Hanan.
Hi, everyone. My name is Hanan Aldahri, and I'm the founder of a company called My Hot Hoods, as in hot neighborhoods. We provide virtual tours about communities and places for people looking to move. We just launched on the Apple App Store less than a week ago, literally a few days ago. And again, our focus is not virtual tours of homes, but it is of neighborhoods. And I've been working on this project. We've been developing since October of 2019, and the timing has changed things. Things have changed considerably, and I'm hoping there's more of a need for this now than ever before.
Why did you go with the name Hot Hoods?
Hot neighborhoods.
I knew the neighborhood part, but what the interesting combination?
I've gotten good feedback about that and some really bad feedback about that. So it's interesting, the comments I've received, but Hot Hoods was taken. So it wasn't worth spending $4,000 for a URL right now at this stage in the company. So we ended up using My Hot Hoods.
Erin had to step out because she couldn't get her sound to work. So questions, anybody have, I know people have questions. People always have questions. Don't be shy and just.
I will say I share Erin's desire to hear some early investment ideas. It sounds like kind of where Erin is where I am as well. So I think some of the questions that Erin had would be very interesting to me.
Okay, David.
So why don't early investment ideas. So you want more about what the best approach is, and you're all. It's great because it's nice. It's great to. I really enjoy the fact that it's it's a diverse group in terms of everyone has there's different businesses and with different backgrounds. So I think it's great that we're crossing a lot of industries, and so I'll try and keep this comment as broad as possible to be applicable. Let me talk about the very first and a common mistake that I see from when I work with diverse businesses in terms of industries is not understanding the client to which they're pitching. And everyone always says have your elevator pitch ready. The elevator pitch does not work the same for every single group. So I get a lot of common ones, and they just assume they'll just put on their headset, well, it's financial services, let me jump for Prudential. And if you're caught up in that suddenly and you don't know somebody, you're going to go with what you can tell about them or what you might know. But the more research and more prepared you can do, the better it is. There's 2 companies in the world named Prudential. Some people think that we're in health insurance. I get the you must have a boatload of money that you're ready to push forward, as opposed but you must write checks to startups all the time. So I think it's very important to understand and try and really drive down and create and try and get the point of the pin or the point of the needle for your business and where you're trying to aim and what the best possible consumer investor in terms of use or consumer is for your business, and then move back from that. So you have your high-end pitch or your high-end, your generic one that could be for anybody, but all the way down and try and focus and find out there's only a few of those tips of the needles. There's only a few companies that are going to be the perfect client for you, and see if you can find them first and work backwards from that so you have the whole scale. I'm doing a kind of a triangle in my hand because I see, I think it's a vector, the top of the funnel where you have just straight up money, there's going to be a lot of that. I don't think that a challenge for startups, and I don't know if this might be probably, given where you all are, it might be something an unfair statement. Getting the money is not the challenge. I don't think finding money is where, I know it is a challenge in terms of the work you have to do, but in terms of the overall sustenance of the business, lots of companies find money, lots of money pours out. It's finding the right money at the right time and the right place for it, and being able to see if you can't envision that and structure it. Just as you want the right advisors, you want the right investors, you want the right customers too. So I think that the biggest mistake, it's not a mistake per se, but the biggest challenge I see is the hunt for the money. Often is when it's not focused or driven towards a specific outcome, makes the back end results more challenging. Does that make sense? Is that a tip that's worthwhile? I'm happy to give you some examples of where I've seen, where it is, and I don't know everyone's situation, but it's something I want, wanted to tell you from the enterprise perspective what I see most common.
And you'd like to see client traction too, right? Client.
Yeah. Well, I mean, if you look at Prudential is, we have 24 different types of domestic businesses. So I look across that. So for Hanan, for your group, I could see where if we're building, we're not doing it now, and we sold our real estate business, but the idea of capturing clients at this outset when they're thinking of buying a new home, when they're making an investment, is really important. So there is a connection there. It's off the periphery Prudential, but being able to find a company like Prudential, but finding the ones that are doing, targeting one that's doing more real estate would make more sense. Duncan, Prudential doing supporting events is going to be a long shot. Yes, there's going to be correlation all over it, but it's not worth the effort to try and get to a Prudential because of the cycle time and how long and be making the sale, as opposed to someone who's going to be directly related to event production and has a bulk of work that can produce a steady stream of revenue. And that's an example. Is most recently someone wanted to sell to us, came to us about doing it's an interactive vending machine. I'm not going to can't go into too much more than that, but it was working with Prudential, they might get one or two of those. Like, we don't have a huge consumer, street-facing obvious consumer base where vending machines would have made mistakes. So could they have gotten a sale from Prudential? Absolutely, but the effort for that sale, the contracting to get in the scope of what it would produce, not great. John, on the other hand, procurement, a company like mission-based company like Prudential, again, I already gave you the example of Connexus, so I don't see why you guys wouldn't make perfect sense in finding those companies, but that's going to be multi-tier to find the ones that the ones like a J&J in New Jersey is going to be have much more consumer product. So they have a different type of procurement than Prudential, which is more technology procurement, but or vendor or consultant procurement. So I think shaping the model and trying to find that really work down to the very best and targeted focus on the very best clients you want, and then move back and move up is much better. And if you get money at the top of the funnel, great. Or if you need money for sustenance and you want to take a large support for or a large investment from a group that's going to give you sustenance while you focus on the clients, no problem with that. But you don't want to take the same approach across the boards.
Can I just add on to that question? We've determined that, or we think going after our actual client base for initial investment, because what we're doing will directly benefit them. Is it a worthwhile venture to go after the clients?
No, I hear you. It depends on how much effort you have to put in. I call that the triple win, because it's a win. Like, I love to do, my best scenario is a company that I'm using at Prudential. where I'm using them where I can consume them at Prudential, grow them as a product within Prudential, put money in them through Newark Venture Partners, and the company does well. Like that's the trifecta. But again, if
Building the eco.
It absolutely is. So yeah, if you could see that, but again, it depends on how much effort. If everyone targeted, it worked in some instances. I think that's where I was saying the messages get mixed when people just say, "Hey, I have a financial wellness product. Why don't you invest in me?" That pitch didn't work as well as finding the home and making sure there's a connection and there's an interested partner within Prudential who wanted to buy the financial wellness solution. And then once we got a little bit of traction and interest there, saying, you know what, if we're going to use you, if we're going to pay you to work with us, maybe we should also consider an investment through one of our early stage areas. So yeah, I definitely think that is. I mean, you might want to consider incubators or VC firms that are focused in the industry vector that you're at. Now, when Newark Venture Partners tells you about the 8 LPs, they can't make no incubator can promise you that by coming in, or incubator or VC can promise you that they're going to bring you business by their partners. It doesn't, and they usually tell you that. If they do tell you that, I'd be suspect, because if the review stage doesn't go away, it just brings you a step closer. So, I would look at that marketplace and see which one's best. I think, Chan, you said it right. I mean, you were talking to Keisha or her team at Impact Investment, you already knew that, right? So you found you didn't just pick an investment institute that was looking for companies that are going to in that's called financial services. You look for one that was.
I was talking to Keisha when she first launched, before she had the capital, so it was really early days. This was 4 or 5 years ago, I guess. But
I talked to it's actually I talked to her in 2009. I met her in London Business School.
Keisha Cash, right?
Yeah.
What a great name for an investor.
She gets that all the time.
Yeah, it's coming back to me now. But here's what I wanted to ask. So we built this platform. It's not as focused as Connexus is on developing access for these disadvantaged groups. That's an ancillary benefit of what we do. But we built this it's more like a Bloomberg terminal that's agnostic to kind of vertical category. And what we are pursuing in parallel is a number of beachheads. And it just coincidentally happens that the first beachhead is in the construction sector in Canada, tied to the infrastructure spending package, which has also ancillary benefits because the government is trying to launch a 5% set aside for indigenous businesses. So this is a way to kill 2 birds with 1 stone. And we got lucky by finding a partner that was very focused on both of those things simultaneously, to your point about trying to figure out what the problem is. But that was kind of like a hit or miss thing. So the first question is, how do we figure out where we're going to get the most potential traction? So we have a number of beachheads, one of which is with respect to extended workforce. I don't know if you're familiar with, how people in IT departments hire either staffing through a VMS MSP solution, or they hire consultants like Infosys. That process has become very fraught in terms of the conflict between IT and procurement. And we think that we have a way to manage that. But I'm struggling to figure out how to get in the door to have that conversation initially. People have said, you should ask for advice as a way to get people to crack the door open and then, get in once you've opened the conversation. But
it's difficult. I mean, the Prudential model is that we had a procurement division under finance, and then we had a vendor management team on IT to manage all the vendors. So people always asking me, when consultants would come and say, we'd like to do work with you, I'm like, I cannot work with you unless you're on the list. They have a preferred vendor list. You get on that list, you do the review, and then we select from those vendors. And with the exception of, I have some great work, I need, advice on construction market in Japan. So I have a vendor that happens to be in that. They weren't on the list, but they're niche, and I have to still get them into that approval so that they're an approved vendor, and then we can work with them. So I think probably the best thing you could do is just find anyone in the company, in the enterprises, to give you an overview of that process, because it's going to be different. We just moved vendor management back into financial management under a chief procurement officer. So is it that way? and ask them to just lay out the process. And most of the people who work in IT will know it because they're beholden to those processes. So if you know that, then you can navigate it to see, am I better off selling to trying to get in the door with someone on the procurement side, the IT side? Likely the procurement side for you, because they're the ones they're the ones who are selecting the vendors and enabling it. IT finds them and brings them to them, but usually IT can't choose their own until they've gone through that process.
Yeah,
So,
it's a meta procurement, the irony of which does not escape me. Yeah.
Yeah.
So, yeah.
But I think that's, if you can map it out. The problem is that every company is going to be a little bit different. Some of them are going to put them in finance. Some of them will put them in IT departments. Some of them will put them in the finance IT, which is, it depends on what the enterprise. Prudential happens to be like was a federated company before. It was 24 independent companies on the enterprise, and some was done in enterprise, some was done local, and that model's all changing right now. To make it more universal in a singular company perspective, but figuring out where those are and it's usually multiple. So I do find a lot of, for me in IT, I get a lot of leverage when companies approach me and say, we really want to do some business with Prudential, or we want to do something. We also talk to these other people at Prudential. Now, if that's a lie, I find out very fast, because I can look it up in a second. I usually call a vendor management team and say, are they on the list or are they not? Do we have any interactions? And it's not a CRM system. The vendor management system just interacts with who's talking. So if they've actually had conversations, I can use those other people as partners and say, hey, look, over here in investment management, I hear that you guys had done some work with this company a long time ago. You had a good relationship. They approached me. Maybe we could partner to see if we get a bigger piece of the pie, or get them some greater exposure in the enterprise. So I think having multiple conversations in the enterprise and then correlating those people and together, you being the niche, because sometimes you'll know more about the business and what's doing than other people internally. So I think it's about, using the LinkedIn and not going with a generic, hey, I want to do work with you, but saying, I see that you work in IT and Prudential. Would you mind? I'm not asking you to sell my services. Could you explain the process to me? And could you maybe introduce me some of your internal peers that you think would be best to advise me on this, if you don't mind, and then find out what kind of value you can give them in exchange. I'd love to tell you about a new solution that might help the company's goals of reaching minority, underserved communities, underserved vendors. Does that make sense?
Yeah. Although we're not just about the underserved communities.
No, I know. Yeah, but you offer it as,
Yeah.
Look, I believe very strongly in the triple bottom line, where, triple bottom line used to be for environment, profit, and the people. I don't believe that to serve underserved community, you have to be focused on it. I think it's best when things are good for business, they can be, you can do well by doing good. So,
well, this is our approach, and I think my prior experience led me to be a little puck shy, as they say in Canada, about leading with my chin in terms of talking about the impact, because that turns a lot of people off. They don't think that the commercial.
Right, you're not trying to be that. But so I believe strongly in it. So I didn't mean to put it in there, but it is an ancillary benefit that's great, and I think that when business can benefit their communities by doing good business, it's that ancillary benefit can be twice as pronounced as if they were trying to support a nonprofit or do something, that was focused specifically on the trying to drive value for an underserved community as a mission. Does that make sense?
Questions?
I'm going to jump in with one in terms of incubators. Given the current scenario and time to market being so crucial, what role, I'm going to rephrase that. Wouldn't joining a incubator or an accelerator at this time kind of hinder your time to market, because you will be losing a precious 3 to 6 months validating within a lab, when you should be probably out there in the market validating it with the real market or with the real people?
It really depends on which incubator you're talking. So let me just tell you about the Newark Venture Partners model. Their job is not to incubate. They give you a whole a slew of services. So again, it's about knowing yourself, your business, and the partners. So I don't think that everyone needs an incubator, and that's a step. It's a great step for a lot of companies. Some advanced companies come in. Newark Venture Partners provides sales training, helps you market your pitch, and then gives you a platform for that pitch that in 3 months you're in front of 200 investors. So it depends on what they're going to be offering. And if for health tech firms coming into Newark Venture Partners is great, because two of their biggest partners are Barnabas Health and Horizon. and they're great, and they have great ties to Atlantic Health. So, the biggest providers in the Northeast, Jersey based. It doesn't mean you get their business and you're automatically a client because of invested, but they have that access in that you could take, that would probably take you those 3 months to figure out. Now, I wouldn't join them just because I wanted to get in there. I would not join them because the equity model made sense to make my business, and second, that I liked it, that I appreciated that, Bonnie talked about her thoughts about Alice and Dan, Tom, and Kevin and the team. You have to understand who they are and see that they're going to align with you and align with your mission and your business. And if that's a match, then I think the incubator can be great. It doesn't always make sense. It's just the same thing as, if you have a self-sustaining business, you shouldn't take on money from third-party investors if you have enough from your friends and family, or if you have enough revenue. So it's that same question of what would you get back? And I think they are driven to choose you based on your question of challenging them on what they, it's got to be a two-way street. MVP is not looking just for companies they can put money into. They're looking for companies that have a strong management team that'll grow within their B2B focus and will push them as well. So that, they're not, they don't want to just hand out a check. And so I think, to answer your question, it really depends on the model where you are. If you've got plenty of relationships and you're good, then and having to prove that to an incubator is going to slow you down, maybe not. But if you're looking for a targeted, as we've talked about, a targeted focus, and there's an incubator or an accelerator or a VC partner that happens to have the right clientele and can help you, a company like yours, because they've done it in a similar model, then I think they're going to save you. They could save you a lot of time. But it's hard to do it's hard to do that. You can't. I don't think you can make that decision without looking at the specific scenarios.
I'd like to add one thing about accelerators, since I do mentor at some of the top accelerators in New York, that the accelerators also provide mentors. And the mentors are usually subject matter experts with contacts in your field, because they will specifically put you, I know ERA has super mentors, which means that they have specific connections and they will work with you very closely. So you have to consider that as well. They can bring you clients. They can really help you pivot or shape whatever you need to do in order to get to the next level. And the mentors are very important. I'm sure you know that too, David. I'm sure you mentor some of the companies at Newark Venture Partners.
Yeah, again, I think it's about knowing, in one of the companies I'm mentoring now, is we're mapping out the business model and saying, where are the things they want? Is mentorship important? Because mentorship can lead. Again, I apologize for going back to you guys have heard me mention a lot of times, but Sean's model is one I understand because I've been in that space. So if he's the company I was talking to before is in the periphery, and they've gone through that process in terms of the company was formerly known as Connexus. Him reaching out to be able to get connected to someone like Keisha who might be a good investor, provide advice, not because she's the direct that could be a value. And that, so that's a great thing that's a great that could do a great that connection could create a mapping that would have taken him months before. So there's great, you have to predict that and go for it. So I think sometimes you could do the same thing if the incubator, that have the different, and the great thing about it is everything is so pronounced. The connections in the fabric and how we all relate is all on LinkedIn and Facebook. You can see it so instantly. So you can almost map where you want to get to very much more easily now than you ever could before.
Totally. Thank you.
What do you think of impact investing? Is it, what are the advantages and disadvantages, the pros and cons of taking impact money? Yeah,
I sit on the board of a nonprofit called the Financial Clinic, and the Financial Clinic has a digital interface called Change Machine, which provides financial coaching to. It's a financial coaching software that we give to third-party and other entities. So we're B2B2C. So we provide it to like the homeless shelter advisors in homeless. The New York Association of Homeless Shelters. Their advisors use it to consult with people coming to the homeless shelter to help them figure out how to get back on their feet financially. That's the tool, and that tool is doing very well. It's sold for licenses, and we just went through this process of should we move the company? Should we consider moving from a nonprofit to impact investing? And what you realize is impact investing is a very, very broad area. There's all kinds of different. I think it was about 3 different categories, and some of the some of the consulting material will say it. There are impact investors that are willing to who want straight up investment for nothing more than the financials. So there's an impact investment. Now, I'm not talking about Prudential's impact investment division, but there are companies, not from the impact investment division, but if I was going to look at the PGIM asset management division of Prudential, and they have to have, if they want to make sure that each of their portfolios has a certain social enterprise profile, for instance, if they're doing good for the community, they just have to put money forward. If they're managing $100 million, $1 million of that's got to go to 1%'s got to go to some kind of good cause. So that's one type that it's just pure. They're not looking at a partnership, the growth of it. They're not in the social impact space, but it's a social impact investment. Goldman Sachs, all the big financial firms have that. They need to have a niche. So that's one type where it's straight return. There's another type that's much more of the partnership where it's a return, and they're looking for equity and they're looking for the model. So Prudential's impact investment division, they invested in Impact America Fund. They believe in Keisha, but we're also looking to Keisha's got to make money. So it's a two-way street. And then the third one is just this straight up grant where it's very well, it could be individual wealth, people with individual wealth. It could be entities that are just putting the money in, and they'll give you they'll give the money and see how you do, but they don't ask for equity in exchange. So it's a different, but they're looking for spaces, like if they want to serve minority communities for procurement, or they want to solve the problem of women in the teaching field. Like this, they have their vectors. So I am a huge believer in, like I said, it used to be called the triple bottom line, but the idea that you can do well by doing good, that business and profits can align with impact on communities and pushing the envelope on creating change. So, I think you can do that in a myriad of ways. I think some that are focused on are great, but in impact investing is terrific. And sometimes it's just a straight up company that has it overall works well. I mean, Prudential's ability to shape the financial services world just by who we are. When we do, like I work in accessibility, I try and find tools for blind and deaf employees to give them equal access to anything we have in the enterprise. When I go to a conference and say, we're doing this at Prudential, companies that are in completely unrelated industries like, oh, Prudential is doing that. So Fortune 50 companies doing that. So we can do that too. We can it's worthwhile to spend our time. So I think it's that balance between, advocacy and profit and tying to a certain vector. It's like, if Shell goes into when they went into alternative fuels, they might not have been doing it for pure play environmental cause, but because Shell did it, you got a major industrial doing it, and everyone wants to follow through, and it makes it mainstream. So, I mean, I got the other example, like if Tesla only made cars that were electric and they weren't great cars, it wouldn't have worked. But the fact that they're a profitable company doing that enables Elon Musk to go out and do crazy things in spaces and make statements on society that others just couldn't get away with.
Prudential allocated $2 billion to impact investing, right?
Yeah, $1 billion.
$1 billion. So how have the returns been?
Excellent. I mean, I don't have the specifics. I can't speak the numbers, but again, that's the group that's under Omid Sateh, and he's got a team of traditional investors. Now, look, it's a little bit different because they're not beholden to the same. They're not the same as our investment or asset management team. So they're not looking at the same things. They may not have the same numbers of return. It's much more of a long game. It can be a value investment, but they don't they don't put money forward in something that's not going to make a return. So they won't give money the foundation will do that. They will not give money out to a green based, environmental entity only for the sake of making sure that we have money in green based entities. That comes out of our investment management team. I mean, Prudential is very different. It's a special. That's why I've worked here for 20 years. It's a special company, I believe, that is very mission based. We do, we've put $1 billion into the city of Newark over the time we've been, and now it's much more higher than that. We put our money where our mouth is. So Prudential is a little bit different in the sense when they do something, they really, if it's going to be something in the social space and social change, we try and do it with some fortitude and some strength around it.
I just want to say I've actually got to run. I've got a meeting. David, funny thing, do you work in the Prudential building that's there in Newark?
Yes, yes.
So I'll be
Ordinarily.
sending a team in. Yeah, ordinarily. In July, I'm actually sending one of my teams in, and we're redoing one of your like speaker spaces to be turned into. Yeah. So my team will be in your building.
In the Dryden Hall, you're redoing the Dryden Hall. Does that sound right? The
Yeah.
old, the original white one. Yeah, I know that's
Yeah.
been up for a long time. I've heard they wanted to revamp it. So that's great.
I just saw the site survey photos, and I was like, oh boy, this place needs some work.
Well, it hasn't been touched for 20 years. I mean, it did serve its purpose very well. So that's excellent.
But now that everything's going to streaming, it's like, yeah, there's some infrastructure needs that need to be addressed in that. So my team will be in there in the month of July.
I won't be in there. I'm not allowed to go back at least until September, so I won't see them. But that's great to hear. I sent you a LinkedIn as well, so you only had, I don't think, doesn't look like you do a lot on LinkedIn, so maybe it was the wrong profile.
I really don't, because LinkedIn does nothing in my industry. So
that's great. We'll connect with you anyway, so I have your contact information. We'll find other ways to do it afterwards.
Absolutely. Great. It was nice to meet you all, and good luck, everyone.
Thank you. You too.
Take care.
So, questions?
What do you think of Lemonade going public? Do you have a view on that?
I do. I absolutely do. I better have a view on it because it's in our industry. I've seen Lemonade found. I was in that space in 2013. I saw the peer-to-peer insurance coming together out of Europe. It's based on a model out of Europe, and then the AIG founders is based broken. I mean, I think the founders are the darlings of the industry. They came out of AIG. They know this stuff. It's a different model. So I think that, I was talking to someone who worked for me yesterday. Their original valuation was 3.5 billion, and they're down to 1 point something billion of their, value. Everyone knew that this would happen, and I give them credit for trying a different way to do sales in the insurance industry. Will it succeed long term? It's hard to tell. I mean, I think they will succeed. Will they be the largest company out there and displace companies like Prudential? That's hard to tell, but I think they have a good shot at it. Well, I mean, it's hard to displace a company of 1.3 trillion assets, but it is a death by 1,000 paper cuts. They're going to take a chunk. They're going to spread out. They're only, I think, they're only in a couple regulated markets. They're not across all 50 states. They're focused. So, I've met them a couple times, and I do enjoy the model, and I'm not surprised they're trying to go public. One thing, I think they've spent a lot of money too. So if they hadn't spent a lot of money, they wouldn't need to go public.
Right. A friend of mine is their head of business and legal affairs, Bill Latza.
Yeah, and they have a very high-priced team, and who's getting?
Yes, they do.
You guys are not volunteering, so I'm sure their operating expenses alone, even though they're just an insurance company, are quite extensive.
Yeah, no, he came from Struck and Levin, so.
Yeah.
So we have a new attendee. Janu, do you want to introduce yourself?
Can you hear me? Sorry.
Yes.
Yeah, just sorry, I'm joining late. I was stuck somewhere, but yeah, I'm interested in data science and hearing about what is the VC outlook these days. So, my background is data science and programming.
And you're at Y Labs, correct?
Oh, he's on mute.
Oh.
Oh,
Making sure I have the right person. I'll wait till he comes back.
Oh, he's there. Oh, Janu, did you hear the question? There he is.
Yeah, Y Labs. It's just this.
Well, now I can see your face, so I can see it matches the profile.
Just doing data science, this thing for many different industries, and including actually some VCs. So happy to join you guys.
Great. Hanan, I don't feel like I answered it. I didn't hear from you. I wanted to know if there's anything that it's a vector outside of Prudential, but I'm curious to hear more about your model and what you think, if questions you had about what might be possibilities, or how you're thinking about approaching enterprises.
Well, at this point, although we're live on the App Store, we're on the we are not generating revenues. We've decided the best approach would be to make this a free app and have a wait and watch and analyze approach before we actually have a premium version that is for sale. I'm not sure what your thoughts on here, but I've been attending when I could attend personally in person, and right now via Zoom, a lot of talks with investors and with VCs and with people who have information such as yourself. And it seems like everyone is looking mostly for revenues. So I've been considering the equity crowdfunding route, and I've had conversations with Republic and another conversation on the way. I think it's with Seed Invest that I'm scheduled to have. But what are your thoughts on that? I think it's going to be a tougher go trying to convince these bigger companies to invest and fund without the actual revenues.
Yeah, I mean, the revenue can be, the ARR and the MRR is a standard question for, incubator. And that's, if you're going into MVP, they don't mind if you don't have enough revenue yet, but if you have a good if you're close to it and you can break the mold, they'll take you on. And that's another great, to the earlier question, another great reason to go into incubator is help them use that, leverage them to take the model that's all shaped out and move that into a revenue model. In your case, revenue doesn't necessarily mean dollars. It could be number of clients. Because if you do this well, you have so many places, you have so many exits, it's unbelievable. I mean, you can go to the Zillows, you can go to any real estate firm. There's plenty of action. So you're building a broad base. If you have a lot of consumers on there, that in itself will speak to it. So getting in the app store and your approach to get them on there is fantastic, but it doesn't help you in terms of sustenance of personal revenue. So it's a balance of how long can you continue to do that. I don't know your circumstances. This is a side project, or if it's everywhere. Unfortunately, in recent discussions, I had a really good perspective from a VC firm in the city. It's not small. It's $10 million, but it's very established partners, and they're like, every other VC firm always asks the same darn questions about product market fit. We don't believe in that. That's outdated. We're looking at the team. I don't think it's outdated. I think you cannot avoid the product. It's a standard question. So if 10% of the companies don't ask you that, you should still be prepared. It's, what's the product? What do you have to offer? How big is the applicable market you can do it? And why do you fit that gap better than anyone else? And what's your barrier to entry from someone else following you or copying your model? So it's a standard question. It's important to ask, and I don't think it can be avoided. How you present it and how you address it can be a little bit different. So I don't, if you don't have revenue, but you have great uptake and you have tens of thousands of people, that itself it's not revenue in terms of dollars of sustaining the product, but each head is worth something. So in each set of eyes or however you're getting them connected and how long you're sustaining them. So it's not just about how many people download the app. It's not even just about how many people use the app. It's going to be how long do they stay on the app? What functions have you done the analytics to see how they navigate the app? Do they go immediately from the neighborhood to the house they want to buy? Are they asking the questions? So what will differentiate you is the understanding the clientele and the data you can accumulate in advance to do it. Because example is we work with a company called Evo, which does health data based on wearables or IoT devices. And when I presented that to the manager, he's like, well, why wouldn't we just, couldn't we just go with Fitbit? It's like, yeah, but the difference is that Evo knows how to look at it, whether or not you're wearing the watch, whether or not you've taken it off, if given it to someone else. They've developed the analytics to know the client and their behavioral patterns so well that it would take years for someone else to catch up on that. So the same thing, if you can find behavioral patterns or understanding of clients based on what they're navigating for, it's not just how many eyeballs you have, but the fact that you know who they are and what they're doing. If you can say that, guess what? We've been able to get 18 to 26-year-old women on this platform. That's as an example, a demographic, and you've been able to find out a certain pattern and in tracking that demographic. It could be any demographic. That's what's valuable. So I would encourage you to try and see if you can push into one of those vectors and have that answer. And that's where I think that's what's as sellable as simple revenue. Revenue could mean nothing if it's generic, if you can't tell about who the clients are.
Thank you.
I've got to go, but this has been great. I'll be in touch, David. Thank you.
All right. It was great meeting you. Thanks so much. Looking forward to
Thank you, Sean.
Thanks, Bonnie.
Anand, did that answer your question? Or I don't want to make, I don't want to be espousing generic overtones that don't help anyone. So.
No, it did. It I have some of the answers to the questions you asked, where we think the hole in the market is, what we think the pain point is, and why we believe we will fit there. We have a non-provisional patent out for our technology. So there's some exciting stuff happening, but I think the real answer to revenue doesn't have to be actually dollars, has a lot to do with our marketing push right now.
Your market being crushed, or what did you say, market being pushed?
Our marketing, so we're working hard on marketing. And yes, you did answer my question. You did answer my question, because literally we're out on the store for a few days. So we need to get this in the hands of as many people as possible.
The traction. And then, but get it in there, and then make sure, don't lose sight of being able to track who they are and what they're doing. So
yes,
10,000 people will be wonderful. 10,000 people that how they navigate that, and what their demographics, or where they're, what devices, any additional information that you can collect, that's going to be your treasure. That's going to be your asset. That data is what will be much more valuable to any investor or enterprise. Your understanding of that data.
Right. Okay, makes
you
sense.
Might be able to find, if Prudential isn't really, you might be able to find patterns that they don't know, right? They didn't realize if Caldwell Banker doesn't realize that what do they usually use as a discerning factor for who's going to go into a community? What are the schools like? What's the commute like? If they finally find out that people, you can tell them that people selecting a home in New Jersey look at the arts, in the arts and restaurant as equally as schools and transportation. And you can prove it. That's a factor that's is 10 times the value of just the individuals that are on the app. Does that make sense?
Yes, it absolutely does.
And so I would encourage you, even if you don't have all that information, to pretend that you do, to build that story as much as possible up front. That so you get all the clients, whenever you're trying to sell this, is not only do we have we gain traction in the store, we know who we know our consumers and who's on this app, and we have a story to tell about them. That will intrigue the interest of your investors much more than I have 10,000 people on the app.
That's a really, really good point. I appreciate that. Yeah, that's really good to know.
I mean, it goes for everybody. I mean, I think it's, you want, that's what I was telling earlier about that pinpoint. Knowing who you're selling to and being able to provide them value that they don't have, because you have an understanding of some database or clientele base that would take them. It's not that they can't get it or they can't buy it, but you want to have that. You want to provide an angle or a relationship or a perspective that is unique and different, and that can be. And then the great news about that is it doesn't have to be at the scale. So you don't have to have the 20 million customers that Prudential has. If you had 10,000 that you knew so well, had a certain behavioral pattern in a certain area, nobody can crack that.
I have to jump off. I want to thank you guys, Bonnie, David, everyone. I hope you.
I'm sorry, I didn't get a chance to get into your model, Erin. I apologize. We didn't have a chance to have a discussion about you. I would have asked you next. I'm trying to go down the line. I don't know if you have
You have a minute?
Guys, have a great weekend.
All right, take care, Erin. Nice to meet you. I connected with you on LinkedIn as well, so hope to be in touch.
Nope, I saw that. Sounds good. Thank you.
We used to start these at 8:30 in the morning. Maybe we should go back to 8:30 in the morning, and because people's days start late morning, I guess. Anyway, good to know. So any other questions?
Well, let me get, I just want to go down the list. So,
okay,
Ami, I want to get to yours, but actually, I'm going to go in order. So, Johnny, I know you answered later on that. I have to talk about data science, but Ami, why don't we talk a little bit about let's go back to your model and some questions you might have.
No, just wondering how to reach the investors, because I'm doing a film and I don't know which investors interested in a doc film.
Well, I think in your situation, looking at, again, that targeted, investors is such a broad scope.
Mm-hmm.
I don't know if you've done and you are a startup and you are looking to make money, but you might be better off in the arts in also looking at the grants or the social impact, looking at companies that have invested interest in what you're doing. So if in the terms of the dance, the type of dance you want to do? Where is that? How does that? Are there other groups that are spending a lot have already spent money in that space, or what is the advantage you can give to them by providing access to that area? So I think it's really about drawing down your model and trying to find out who you should be targeting. And it's a very tough one because it's very unique, and it's good because you are so unique and you're looking at a very targeted audience. It's challenging because it's hard to figure out how to package that. So I think you want to get away from the broad-based investor generic money, because I don't think it's going to be something you can't compete with these other industries and the other areas, and you're not the same. You're not creating an app with, this is the example we just went through with eyeballs. That's not going to be the value pitch, and you don't want to be up against that. I think it's really taking a look at what the end value you're bringing to an enterprise or an investor is, and how you can structure that.
Right.
And I was going to say you might want to look at family offices too, and
yes,
you would think, because I happen to approach a family office, and working on a health IT, and the person just happens to have serious health issues and loves it, but it's like that was kismet. So yes, family offices. See what
I mean. It's a tough time for you too because of COVID. I mean, the performing arts are the last. They're not open yet.
Right.
So, there's really nothing you can do. You only have. How can I don't think you're looking to virtualize your product. You can't do the in-person right now, so it's a challenge, and I think you're gonna have to accept that and see where it goes, because it's what are they saying now? We opened the call and said, but only 2 states are, what was it, Rhode Island and New Jersey, the only ones that are having great numbers of COVID. So if the second wave is here and we're going to be extending this, and people are going to, and we're not going to see live arts performances come back for much longer until 2020, late 2021, I think it's important you understand that and figure out how to pivot.
Right. And that's why I was trying to do it for doc film, because right now performance is not going to be the same. Even though theater is open, it could be only half seat instead of full seat.
Yeah, and so which means the money that they're going to put out is going to be very selective. So the product is hard to. But I have hope that you'll find something that will be different. I think that you're going to find a vein that might be that someone's missing, and if you can hit it right.
Right.
There's always, to me, it's always like I always drive by that business that's been empty in the corner for 20 years, and everyone's always seen it, and then suddenly some restaurant or someone comes up with a novel idea and it's the hottest place in town. I always think of that. So there's something out there that's going to make your business blossom. It's hard to figure out without the knowledge. でも頑張れば絶対出てくるから心配しなくて。
ありがとうございます。
Get out of the
You lived in Japan for 5 years, David.
Yeah, I didn't realize you speak Japanese. I do too.
Yeah. I thought it might be possible.
Oh, that's great. Thank you.
So, Janu, did you want to talk more about, what is the challenge at Y Labs, and what are the questions you would like me to address?
I joined in late, so I'm a little, didn't know what discussions you had. I mean, we're not really raising money or anything like that. So we're not doing, not a product, but doing data science work for different clients. I do have some ideas for product, but probably down the line. I'm just more curious about what's going on in the VC industry, and what fields are you active in at the moment? I mean, I know there's been a big dip because of Corona. Has it picked up, or I'm just curious about the VC industry?
No, I mean, our VC work has not slowed down. It's there. Money has to be deployed and returns have to be made. So it's moved some of the things from direct in-person engagements to virtual. But and again, I can't tell you about what it looked. I have to go on CB Insights and see what it looked like for what does the data science look like as a whole. It's the focus I'm looking is more B2B and enterprise grade. So that does, data science is absolutely an aspect of it. So I don't see I haven't heard of anything specific that slowed down data science. I mean, I think if anything, analytics and understanding are much more prominent now than ever before because of, of the need to understand, of everything going on and people being remote. So I think there's probably a whole new field that's just about shaping that out and figure out how, what's the messaging and what's the need right now, given the change in social circumstances we're facing during a pandemic.
Okay.
Any other questions?
I guess one other question would be, I'm curious, I guess I joined late. Is a Prudential Financial, it's not a traditional VC firm, right? What kind, that's part of
No, we're a broad-based financial services firm. Focus, more simply, our easiest way to say we really focus on retirement, but we have $1.3 trillion in assets under management. So insurance companies most of VC funds have some kind of insurance money in them. So you could be pretty assured that Prudential's I said it yesterday to Bonnie and Mac, and she's like, "What do you mean you invest in everything?" I'm like, "Well, because there's no place where I don't think there's any investment fund you can find that doesn't have insurance money or family, just like private family office money in it. Outside of pension funds, I think pension funds and public and what's the word for government entities? I can't think of the word offhand. Like the United Arab Emirates, or the Chinese government, those government funds, and there's
sovereign wealth fund.
Sovereign wealth. Sovereign wealth. There's educational institutions. There's pension funds, and then insurance companies. So you can be pretty assured that our money is always somewhere buried behind something. Okay. In some ways, it's very prominent in terms of our direct funds. In some ways, it's hard to you wouldn't be able to tell because we're sitting behind a partner and buried in layers.
Okay. So it's a small venture arm of the whole big company, right?
I work in the in the technology side of implementing the solutions that come out of our VC partners and the companies that try and make them successful. But I work with a couple of our select venture capital firms. There's a whole venture arm in Prudential that manages massive tracks in the billions of dollars of investment that they do through LPs and into major funds or themselves. So it'd be hard. It'd probably be a big mapping of who's putting money out. There's the businesses themselves do some direct investment too. So it's again, $1.3 trillion in assets is a lot of money going out the door in a lot of different shapes and forms. So it's but definitely not a traditional venture capital fund. That's for sure.
One other question. So do you see are they projecting winners and losers, and which industries are more going to be after this whole thing subsides? Or?
I mean, I have my own personal opinions. I won't be able to say it on behalf of I know that our equity analysts at Prudential probably have white papers published up across the boards, and everyone's saying it. So I'll only give you my personal. It's not on the record, but it's still. I told Ami earlier. I really think you're going to find people that have out of the financial crisis in 2009. I think there were 8 unicorns born.
Yep.
Right, and I think. And I've heard some great news that out of this crisis, we're going to see the same.
Yeah.
What they're going to be is hard to tell, but there is going to be a new shape and a new construct of some businesses. I think of what's the classic movie, Bonnie, from this late 70s, early 80s with where the end he says, "I got one word for you, son: plastics."
Oh, that was The Graduate.
The Graduate, right?
The Graduate, yeah.
So I walk around the supermarket and see all the plexiglass screens and the plexiglass everywhere, and I said, "Well, I got one word for you, son: plastics." There are vectors that are sprouting, like the remote health is huge, and the platform is sustenance for that. The what else are we seeing?
A friend of mine works for a traditional. They sell boxes. I can't remember the name of the company. Boxes and packaging. Do you know? Of course, because everybody's having everything shipped at home. Absolutely exploding. Everybody needs boxes and packaging.
Yeah.
So
I think you're always going to get that mix of what we know that in-person retail,
Yep.
and travel and under performance arts related. Those things are all going to have a long sustainable hit until they recreate themselves and re-emerge in different shape. In the meantime, the online and the IT based stuff is going gangbusters. So it's I was talking to someone yesterday at Prudential, was like, I just couldn't believe it. Get this alert. Like, I don't know, I'm sure you all saw it 3 weeks ago. The market was at the highest point ever. And you're saying, how can that be? How can the volumes be so high? Because the indexes were probably swayed by the IT firms or whatever. But I think they're going to be that disparity of who does great in recreating themselves or new industry vectors versus who unfortunately suffers.
And look, Facebook lost all those advertisers, and yesterday their stock was up. Go figure.
Yeah, that's weird.
Yes, but it's true that in down markets, that's when Google, I was working with Google when it was just Larry and Sergey, and no, I couldn't get anybody to work with them because, well, Yahoo owns search. And Google, you got to tell them you have to change the name. That was something I actually heard. And they're Google. They wouldn't. I didn't even mention it to Larry and Sergey. So, since you're very actively involved in the accelerator, and since I very actively mentor at accelerators, and we host, like as I said, we're hosting Thomas and Allison soon, and even whether they're in real life or whether they're online, and we always host ERA and anybody else who has accelerators and want to talk about it. The question always comes up, well, why do I want to give up all that equity? That's a lot of equity to give up for 3 months, but it's not 3 months. That's something that entrepreneurs don't understand. And it's an ongoing relationship, right, David? The people don't understand the value that the mentors and the partners and everybody else bring to it. So,
yeah, I mean, you're going to have. It's all about a trade. What the value prospect is for your individual business and where you want to make that, where you want to place that value, what it's worth to you. So, if you ask me, should I give up 4% of this? I can't tell you that. It depends on what your business is and what, how much the value you might get. If you wanted to pay a marketing coach and a sales coach and a business development lead and in space, that could add up to more than the equity, more than 4%. I mean, that could be tens of thousands of dollars, and you get that for free. It's not for free, for the equity, for the investment you get out of the incubator. Now, don't forget, they put money in too. They give you money to sustain yourself. So it's not a one-way street. And I just think it comes down to always looking at your own model and assessing what your needs are and what the value is of addressing those needs.
and it's always amazing that, because a lot of times I'll meet these companies when they're first coming in and they'll present to mentors. And then at demo day, they've got traction. They're making money because partnerships are in place. That's part of the job. The accelerators will look at you depending on, and choose whether or not they can really help you. They're not trying to just grab equity in your company. They really want to help you. So, and there are different accelerators out there. So find one that will focus in your space and has mentors who can help. Anyway, sorry, didn't mean to monopolize. I'm sure people have questions, and you're our guest.
Was there anything else? I mean, I could fill the time, and we only have 10 minutes left. Were there any other questions you guys wanted me to address? Anything else you wanted to go into detail on?
I had another question. I think, what do you guys all think of New York itself? I think seems like many of my friends have left. The city itself is emptied. What do you guys think of the city itself? It's taken a hit. Is it coming back? Or what?
New York always comes back. When do the cities not? I don't know that we'll see the mainstream. I think people. If you looked worldwide, globally, the data about a year ago, I think they said that like 30% of the world's population was moving to the coast into the urban areas. Yep. I think that trend might reverse. But I think those trends they're trends because that's exactly what a trend is. It goes back and forth. I think they saw when in the 70s there was a mass migration to the suburbs and the development of the gated neighborhoods and the sheltered malls. And then it moved into more open, and then people started moving back into urban areas. And then these are the way things happen. There's plenty of land out there for everyone. So I can't ever imagine that New York won't come back. I mean, I knew that at the financial crisis, a friend had told me about he could have bought a brownstone on Park South for $2 million. It's worth 8, 10, 12 million, or maybe not currently today, but a year ago. So a friend, one of the companies that invested in from Newark Venture Partners, are talking to the founder who just had an exit after 3 years. And to your earlier question, he only did the incubator for 3 weeks, and he just had his exit. So continual relationship. I'm talking about Dream Forward, which was a 401k platform. He just sold to an industry trade group. But he was saying that he an apartment in New York City, for another $1,000, he's looking at something like 1,900, not 1,900 square feet, but a 1-bedroom in Midtown with a backyard. That thing would have been 4 times the price a couple of weeks ago. So you can get a lot more for a lot less right now. So it's kind of, where do you want to be? I would probably say it's a good time to pick up property in New York if you have the ability to do so. But it will always continue.
I was talking to an investor friend of mine, and he left the city. And he was talking about how, and he was born and raised in the city, and he was talking about how Manhattan and even Brooklyn have become so prohibitively expensive. It pushed out all the young people, all the creative people, and blah blah blah. And the city lost a lot of its heart because of that. And now that might change, and it might bring back the grunge and the creativity and So there's always a silver lining.
We can't be afraid of change.
Right.
Are you all still in the city? Everybody's in the city. I'm in Manhattan. You guys are?
No, I'm based in New Jersey, so.
I'm in the city.
I'm ordinarily in the city, but I'm out in Pennsylvania for the duration.
Ah, okay. Hey, I know a lot of people are hiding from the city. I think. I have health reasons, but I can't wear the mask for medical reasons. Great. And I know that people in the city just get crazed. I even have a medical card that I'm going to start wearing.
Yeah, Bonnie, you should tell us a little bit about your medical startup.
Oh, it's a health IT startup. I have to send it to David, but it's an overlay. It's electronic health record. I don't want to monopolize your time with David. I can talk to you another time because I know we only have a few minutes
you
left.
told me all about it, but I'm thinking if your startup is looking for patients, this is a good platform to source some who might need the help.
Oh yeah, well, we were getting traction, or we were having discussions, and COVID-19 hit, and just as hospitals were only allowed to admit COVID-19 patients, we got they're starting to come back to have those conversations now.
Good.
Because even though everybody says, oh, there's an uptick in blah blah blah, it's not necessarily true. People are going in and getting tested, and they find antibodies. So it's not, oh, look, we have this explosion of cases. All these people had it that we previously didn't know had it and recovered.
Agree. I mean, it's I think how you interpret data. I mean, and
Yes.
back to your question on New York City. I mean, if you speak to, for instance, restaurant owners, you'll get a pulse of the optimism that is there, right? And then you can speak to another set of them who think, oh my God, life is so miserable. Only 3 customers are walking into the door, right? So you tend to have a cross-section of who you speak to. And it's the same thing with, I think, how you look at data in terms of what's going to happen in the city as well. I think the city is resilient. It has been historically a resilient city, and it'll provide, especially people with enough cash flow, some great opportunities for investment in real estate, as well as buying some restaurant businesses. And in that kind of space, I see a lot of growth.
I'm very opinionated when it comes to this subject, and I probably shouldn't say anything because I have this underlying malaria, and I know how the face mask really, you can't even stop a cold with a face mask, by the way. You can't stop a cold. How are you going to stop a virus with just, which I don't understand. So, it's not a panacea. It's really not protection. Don't get me started because I do have a science background, and I used to work in research labs, and it's just, and politicians should not be in control of medical decisions. They just shouldn't.
Cool.
And we're going to leave it at that.
Yes.
Well, thank you all for the time. Thank you for listening. I've reached out to you all on
Thank you so
LinkedIn.
much, David.
So feel free to ping me with any questions. I know I tend to be slow. Can be slow to respond. I feel like I have a whole other life on LinkedIn outside of my my work life, and I've got to really focus on work. But I try my best to at least give a quick answer or be responsive. But all my contact information is on there, and I'm always happy to address something, even if it's outside of the vector directly related to Prudential. And I'll be honest and straightforward. I believe in transparency and to build trust. So if it's not something of anything in our field, then I'm not going to profess it. It would be. I don't think stringing people along does anybody any help. So
I have one last quick question. How has it been working for you, working from home, rather than going into the office all the day and every day?
I mean, Prudential, we went to about 95% remote access overnight, and we had a very robust infrastructure. It's kind of what we do best. So we don't make any products. We sell promises. They're virtual things based on data and IT. So there's no reason anyone in Prudential other than the traders had to be there in person. So work-wise, the substance of what I have to do isn't so challenging. It's the normal everyone else is going through, just the psychological lockup, being home all day, not getting out, I think when an early virtual summit, they said, what will you miss most? What will you do? What are you going to do when you leave? And somebody was like, I'm going to go to Italy and I'm going to go to France. I said, I'm just looking forward to dropping my kids off at school again and saying good morning to the person who walked in the door and say, how are you? And, I'm going to miss handshakes and hugs. I think that we're human beings. We're meant to interact physically. Yep. It's part of our nature. Some people not, but I'm not one of those people. I need physical interaction.
I'm a hugger too.
I miss that. I mean, Bonnie, you and I tried I drove up for an hour and a half to hit an hour and a half conference that had been 3 days for the peak pitch in the end of February. And people are like, well, I can't believe you came up here just for that. But now in retrospect, what a great investment. I'm so glad I had a chance to get up there and talk to you. That value of just seeing a bunch of people, diverse group in a short amount of time is fantastic. So, you can't, human interaction is critical. So we do our best. I like the expression a lot of people put on Facebook that, we're not, a lot of people, we're all in the same boat. No, we're not in the same boat. We're in the same storm and everyone has their individual boat.
That's good.
So, some people are taking care of elderly. Some people have their own conditions. Some people have to take care of kids. Some people are out of work. It's a massive storm, and I hope we all ride through it and rise up. And I think that I'm confident that will be the case for many groups and people.
I am going to use that. I'm going to quote you on that. That's
not I borrowed it from someone else, so I don't know.
Oh, really?
I'm
going to say that you mentioned it at the breakfast.
Yeah.
That is brilliant.
Well, you have the, 気づいたのボニーの後ろの絵があるじゃないですか. You have behind your head, you have the Japanese wave, so.
Oh, I do.
Yeah.
Yes, we are in the middle of a tsunami, aren't we?
Yeah.
But you did just speak Japanese, did you not?
Yes.
I was like, what?
Ami said you could speak Japanese, so yeah.
I do.
Arigato gozaimasu.
Go definitely. I don't get to use it so much, so I apologize for taking an opportunity here.
We have fun. So anything
Excellent.
else?
Well, thank you very much, Bonnie. Again, everyone, and reach out anytime. I appreciate the opportunity. Great to hear your stories, and anything I can do for anyone, I'm happy to help.
Thank you so much. Have a wonderful holiday weekend, everybody, wherever you are. And
take care. Enjoy the holiday, everybody.
Thank you.
Bye, everyone. Cheers.
Hickson, I will connect with you later.
Yes, please.